Thank you for coming to take my interview today.
No, thanks for the opportunity. It's always good a chance to see you, Lillian, and talk to you. So this is wonderful. I really appreciate the opportunity to review and talk about real estate. So
great. So why don't you introduce yourself to our audience?
Sure, absolutely. So my name is Mike Ponte. I am the president and founder of a company called Prosperity Real Estate Investments. I've been investing in real estate since 2002. So we're just pushing around 18 years now. We are investors in many different markets, specifically in the Canadian marketplace. So we'll be like in Halifax, in Fort St. John, in Calgary, and in Edmonton. Those are kind of our main areas of focus at this point in time. And we've also got a very big, extensive portfolio, a big chunk that is single family homes or residential properties. And then we have migrated many years ago over to apartment buildings. So that tends to be our expertise right now and our focus at this point in time. So yeah, we've been doing this a very, very long time. We've been, not only are we an investment company, but in addition to that, we also help coach and train people that are interested in investing in real estate as well. Just based on a lot of our experience, people have asked us for help and assistance. And that's kind of what we've been doing for the last 18 years. And hopefully for another 18 more years to come. So yeah, it's been pretty fun fun gig. So yes.
So could you tell me why you choose Edmonton? Like when did you start investing in Edmonton?
Yeah, I started in Edmonton. Actually, that was one of my very first properties, to be honest with you, was in Edmonton. And I bought in Edmonton for several different reasons. The biggest one when I first got started was, the price, because I knew that right at that point in time, there were some really good deals. So I bought like a townhome at that time for about $85,000. It was really cheap. And even with that being said, that property wasn't generating any cash flow at the time, but I didn't really know what I was doing when I first got started. So it was negative cash flow, $40 a month. But then when the following year, we were able to get some pretty significant rent increases and the cash flow became quite lucrative. And so when I saw that as an opportunity, we said, okay, here's a good market that we can get some really good deals, good prices. But more importantly, this is an area where we can actually generate cash flow. So that's the reason why I started in Edmonton. We still invest in Edmonton, even still today. There are a lot of diamonds in the rough in Edmonton right now, and there's huge opportunities. And as long as you're patient and you've got a good system and a good team in place, this can actually provide some really good opportunities in that particular market right now.
So I know in the past few years, the price went up, even vacancy rate went up. Like, what's your input on that? Like, what kind of property that have less vacancy, or some of the property have a higher vacancy?
Sure, that's actually a really good question. I'm glad you asked me that one. So when you're looking in the marketplace and in Edmonton specifically, you're right. The market right now is got a higher vacancy than it has in many years. But the real key is just making sure that you have a good property profile to attract your target tenants. If you've got a 1-bedroom condo or a bachelor condo in Edmonton, that one will become much more challenging to fill because you're dealing with a specific demographic. You're dealing with like a student most likely, or maybe a very young couple. But because of the size of the suite, they are probably only going to stay there for maybe a year anyway, because they may want to upgrade or they want to rent something a little bit bigger. So the more bedrooms that you have, the better it's going to be for yourself. Townhome, you can get a townhome right now in Edmonton, $175,000, $180,000. You can get some even cheaper than that, to be honest with you. And if you pick it right where it's near a school, it's even better. So you tend having longer term tenants in a bigger type of property. And then the same thing would apply with bigger houses. Like if you got a bungalow or a home or something of that nature, anything that's got more bedrooms will provide you more stability during times of recessionary periods, because they just tend to be there a lot longer.
Yeah, I want to know, earlier you talk about townhouse.
Yes.
$170,000, $180,000.
Yes.
How much rent you can get?
That one you can range, depending on the condition of the property. They are ranging right now, and again, depending on the area. So if you're kind of in the northeast part of Edmonton, you can kind of get something in the area of maybe between $1,295 to maybe up to $1,345, somewhere in that vicinity. For in the northwest side, kind of the Castleman area, that whole area, you'll probably be seeing more rent. $1,345, 1385. Millwoods, which is southeast as well, you're obviously going to get more rent down there as well, kind of roughly around the same area. As an average, be looking at somewhere close to around 1215 to up to 1345 as well.
Yeah, I know, Michael, that you do residential and also commercial, like apartment buildings.
Yes.
Could you tell us a little bit about what's the difference in terms of investment point of view?
Like the amount of money, or what would you like to know?
In terms of return.
Yes.
And also applying for mortgage.
Yes. Okay, so that's good. So first of all, maybe I'll start with the mortgage side of things. So the process to getting into single families, to be honest, is a lot easier than going into the multifamily side. There's just so many more layers that need to be uncovered. So with the residential side, to apply for a mortgage, it's really based on the individual's credit score, income. So it's based on the individual that's purchasing the property. Relatively simple, quick process from that side. In multifamily, it's actually much more steps that are involved. When you're buying an apartment building, you're actually buying a business, not necessarily just a property per se. And so when the banks look at that, they're like, okay, how is this business performing? And based on the rental income and the expenses, they'll produce something called a cap rate. And the higher the cap rate that this property is, the more value this property is worth. If it's been run down where the landlord's been a little absentee, he's not doing a lot of maintenance, he's got really low rents, that's the reason why this is low. Where you have another property, what they've done is they've improved it, good quality tenants, high rent. That's why it's actually worth more. So when the banks are actually qualifying for this particular property, they're looking at how is this property performing? Do we feel comfortable financing this business? And that's the first step. And then secondly, they then look at the individual that's buying the property. Okay. Now, depending on how you structure this investment, in a lot of cases, you want to set up a corporation to acquire this property. This corporation actually holds title to the property and is on mortgage to the property. And then the individual is a shareholder of this corporation, the owner. The process for financing can take a long time. In multifamily, if you're trying to get financing, it could probably take somewhere in the area of around at least 90 to 120 days. The financing is going to be needing an appraisal. There's something called an engineering report, which is very similar to what you would see as a home inspection there. And then you'd also do something called an environmentals to make sure there's no environmental concerns in the property. They want to see if there was a gas station previous to that. So all of these are much higher expenses than what you would see in the residential side. In my past, it's always been more expensive to get commercial financing than it has been residential, always. And on the commercial side, we've never seen rates like we have seen in commercial, like we have seen in the last 6 months, actually. So we just did a refinance with one of our apartment buildings, and we just locked in at 2.67% for a 5-year fixed, amortized over 30 years. And so in the past, we have never seen a rate like that ever. So it provides security in regards to the amount of cash flow we're producing out of that property. So that's become a very attractive. It's just that there's a lot more steps involved. Where residential, there's much more opportunity to take advantage of really good interest rates today. It is definitely simpler for residential than commercial. But if it's done right, you can definitely make a lot of money in the commercial world for sure.
What's the down payment normally they require?
That one was 20% for me. You can see 20, 25%, some cases up to 30%. What the bank's willing to fund you for can vary in regards to down payment, amortization, interest rate. They may all vary, even if you bought them all around the same time. And it's just based on the property's performances, if that makes sense. Okay, so for a lot of people trying to get into multifamily, becoming more and more common to get short-term financing just to get going, and then after get conventional financing at a later date. So in regards to returns, they both can do very, very well. It's depending on your strategy here. So for a small amount, so for example, like a townhome like we talked about, if you're buying something for $170,000, and you're able to renovate it for $10,000 and flip it out for $200,000 somewhere in that vicinity, you could be making a pretty decent little return for a very small investment. You know, your investment in something like that would cost maybe $40,000 to $50,000 within 60, 90 days if you really wanted to. So that's almost a 50% return. Biggest difference that I find is if you're looking at it from a cash flow perspective, I find that multifamily is obviously going to be a stronger cash flow opportunity, because with a townhome, you are going to have, if you have vacancy, you're now 100% vacant. Where if you bought a 9-unit apartment building, if you have one vacancy, you're looking at somewhere near around 11 or 12% vacancy.
Well, another question I want to ask you is during that 18 years, the 4 cycles. Can you explain a little bit from 2002 until now, like which year is the best?
Yeah. Well, okay, so I started in 2002. At that point in time, the market was relatively flat. So we were seeing just modest appreciation, and it was just more of a standard normal market, right? So probably about 2 to 3% appreciation. And then shortly after 2003, 2004, the market really took off like drastically. And so we saw appreciation like we've never, very similar to what we saw here in Vancouver. Okay, we saw massive appreciation. There was not enough employees. There was lots of jobs available in Edmonton. So it was just go, go, go. Rent increases were going through the roof. We were doing at one point, 20, 30%, 40% increases in rent. So it was unbelievable from one year to the next. Say some of the top markets back then, I'm going to say 2006, even 2007, early part 2007. Those were unbelievable times, 2005, 2006, and 2007. And in Edmonton, it's had now 1, 2, I think we're now on almost our 3rd cycle in less than almost 20 years. So it's been really quite roller coastery. And then the second part to that, I'm going to say, after the recession, 2008, 2009, they provided really good buying opportunities because there was lots of people that were in distress and lots of motivated sellers. We were in acquisition mode. We bought lots of properties during that recessionary period, 2013, 2014, 2015, and prices start to go back up. So we were buying apartment buildings in like 2011 for about $65,000 to $67,000 per door, per unit. And then when we saw a situation where the recession was about to hit us again in late 2015, early 2016, we made some decisions on either to sell or to refinance at that time. And then so some of the properties that we're buying for such a low price, we were actually selling in less than 2.5 years at about 119, 118 a door. So we've done very, very well in a very short period of time. Now, if you look at what's going on today, those same apartment buildings that we sold for about 118, 119 a door are currently probably priced at around 102, 103, maybe even 100 a door right now. So prices have dipped since then. So we're very fortunate to sell some of the assets and protect our money. We're trying to find those deals. We're trying to find those opportunities yet again in a depressed market so we can jump back in. So Edmonton, they've had a very long bad cycle here for the last, we're almost 5 years now.
Let's say if somebody want to invest in Edmonton right now.
Sure.
What kind of property do you recommend?
It really is tough because sometimes it's just based on how much capital you also have as well to invest in the market too, right? So, when you're buying apartment buildings, you're going to need quite a bit of capital. As an average, if you're buying something for $1 million, if you got a 30% down payment on $1 million, have say an extra $100,000 there to do renovations and vacancies and all of those things. Say $400,000 for something that you're buying for $1 million to get into the apartment building world. If you can, apartment buildings are a great way to go. The other part that I would also encourage is you may want to buy an apartment building, but take the time to learn about what you need to do. So get educated in regards to owning an apartment building because it's very, very different than buying a single family home. Okay. Now, when it comes to recommendations for people that are just trying to get in, looking for an opportunity. So if you can find yourself like a suite duplex, which is very, very appealing right now. So it's got it's a duplex where side by side and you can rent the upstairs and then downstairs. Something that's got maybe 3 bedrooms upstairs and then 2 bedrooms or 3 bedrooms downstairs can be a really appealing and great cash flowing opportunity.
And we talk about tenant, and what do you think compare BC and Alberta?
The biggest challenge that we face here in the BC marketplace, and it's always very concerning to me, is just the limitation that you can control in regards to how much money you can make to cover off expenses. And so, when you're only able to raise the rent under 3%, it's almost impossible to recover a lot of the expenses that are going to be happening. So for example, and it's in the news quite a bit right now, is insurance. So insurance costs are going through the roof right now. And then as values go up, you're paying more taxes. Utility bills are always going up as well. So we're in Alberta. they are very, I'm going to say 50-50 with the tenant and landlord. So they work in conjunction. But what they do is they let the market dictate what the rent is going to be. And that, I think, is a lot more fairer. In situations where the government is interfering, it's really hard to run a real estate investment business when they're capping how much you're able to raise rents, increase rental income. Because technically, if you're not able to get those increases appropriately, you can't actually spend back into the property as well to do the work. To me, Alberta is a much more landlord positive. So in Vancouver or BC, you're only able to hold a damage deposit of a half month's rent. In Alberta, you can hold up to a full month's rent in that scenario here. So when a tenant is becoming evicted, we obviously get a chance to keep their damage deposit, which covers off that expense for that 1 month's worth of rent. But I'm going to say the timeline in regards to getting the evictions done are probably close to what we're seing in BC.
2020. And is there any deal that you're working on?
Sure. So for us, our plan is really, we are in acquisition mode. So we are buying properties. We're looking for deals to be had. So currently we have a property under contract. It's a 12-unit apartment building in Edmonton. And then we're continuing to look at other deals as things kind of come out, but we will only invest in projects that make the most sense. So the plan is that we see an opportunity, we see deals. I still like Edmonton. Even though with some of the challenges that are there, to me, I look at this as there's further opportunities ahead of us here, possibly in the next 3, 4, 6 months from now. So there's some really good opportunities to look for deals there at this point in time. But again, long-term mentalities to it. So that, initially the plan is for this coming years, our focus is really finding opportunities for myself and our investors and trying to find the right deals that make the most fundamental sense that can provide the best returns for their clients. Initially, we've got target that we're hoping to secure at least 3 properties this coming year. Hopefully that will be the case. We are off to a pretty good start to begin with. And most likely we'll be staying in the multifamily side in the business, but it's not that we're closed to the single family or residential side. It's just got to make, again, fundamental sense. We're never close to looking at residential as long as the numbers work. Whenever we work with any new clients, it's kind of an interview process that we work with before we're bringing anybody in. People ask questions of us and what we do and make sure they're comfortable working with us. And the same thing in return needs to happen too, because if we're going to be working with somebody, we want to be able to get a chance to know who they are because we're going to be with them for the next 3 to 5 years. So I always look at joint venturing as almost like a marriage because we are going to be kind of working together for some time. So we want to make sure we're compatible and what their particular goals is something we're able to accomplish and that they're going to be comfortable with it. And what we've done in the past is suitable for what they're looking for as well. So we just want to find the right fit for anybody that we're looking at bringing.
Great.
Yeah.
Thank you very much, Michael.
Thank you for your time. I really appreciate it, Lillian. And if I can be of any assistance down the road, please don't hesitate to reach out. It's been a pleasure.
Yeah, I will. Thank you.